case study. In today's episode, we're deep diving some of the behind-the-scenes startup costs associated with getting started with rental real estate. Hey everyone, I'm Clayton Morris, the founder of Morris Invest, and today we're enjoying a little outside podcasting, video casting out here. It's too beautiful on this spring day to be inside a studio, so hopefully the wind won't pick up too much and it won't be too bad. But today on the show, we are going to deep dive the questions around getting started with real estate investing and some of those hidden costs that people don't think about when they're setting up and getting started with their first rental property. So we're going to dive into some of those suggestions and questions today. And there are probably other costs that may be out there that I might not have thought about, but these are the costs that my clients at Morris Invest and I personally have to go through when I'm buying a new rental property. And so this isn't, we're not talking about commercial property and we're not talking about other assets that we're picking up. I'm specifically talking about the types of properties that I purchase, the types of properties that my company does, those single family homes, 3-bedroom, 1-bath in the Midwest. The prices are going to be right around that $40,000 mark. That's my bread and butter properties that we do. So given that as a ceiling on what types of properties I buy, let's kind of dive into some of those case study costs that you could expect when you're buying your first rental property. Now, of course, the purchase of the property is going to be a cost, right? You're paying cash for the property. Now, cash can be any number of things, right? It could be you borrow money from your 401k. I've got videos and sessions right here on the channel all about how to do that. It could be that you've got money in savings, so you're buying it out of your savings account. It could be you buy it from a self-directed IRA. Maybe you've got private funding that you take on. Any number of ways that you acquire that property, those are going to be costs, of course, associated with buying that property. We get that, right? The purchase of the house, that's kind of an obvious one. But what are some of the hidden costs associated with buying rental properties? Let's start with the most important, setting up your business entity. Now, I'm going to put up the whiteboard here. If you're watching on the video version of this, I'm going to put up the whiteboard and kind of go through some of the costs. But if you're listening to this, I'll break them down as equally important so you can hear them and jot them down as well. So an LLC. Now, this is going to be different depending on where you're purchasing or setting up your LLC. I'll give you a couple of examples. So we, in the state of Indiana, where we do a lot of our properties, you'll just go to the state's Department of State website and you can set up an LLC for about $100, $125. You could also use a service like LegalZoom, something like that, what's going to cost you about $300. You could use a website called, like, for instance, in Florida, it could be, I think, floridaregisteredagent.com. Or in Michigan, we work with an attorney there to set it up very quickly, and that's going to be about $300. So the range on setting up an LLC or your business entity is going to be between $100 and $300. Now that's going to be typical across the country. However, if you're setting up an LLC in California, which again wouldn't recommend investing in California. That's not my bag at all. Costs are way too high. But investing in California, setting up an LLC can be about $800. You can tell that the California government really wants people to do business in their state. Another hidden cost, or one a lot of people might not think about when they're buying their first rental property, is the insurance on the rental property itself. Now, of course, these things can change and they can cost different things in different areas, and it depends on how much coverage you want to get on your rental property. For each of the properties that I personally buy, my wife and I typically will put it's around $400 to $600 a year for rental coverage and liability insurance on our properties. $400 to $600, that's a good rule of thumb, a good range that you can expect to pay for your insurance. Now, sometimes it could be a little bit less if you don't get as much coverage as maybe we do, and it can be a little bit more if you want more of a Cadillac policy, as some people will call them. Maybe replacement costs are higher. But for me, on a property that I'm buying, that I'm paying $45,000 for, and it's worth 50 or it's worth 45-ish or 48 or 49, I'm going to get a replacement plan coverage of about $50,000. I'm not going to try to twist the arm of the insurance company and try to get them to get me replacement costs of $75,000. They're never going to go for that. So the replacement is just going to be a little bit more right around the value of that property, so that I know if, God forbid, there's a fire and the place burns down, I can rebuild it for the replacement value of the property. Easy peasy, lemon squeezy. So there we go. We've got LLC and we've got insurance. Now, you also want to take into account setting up a business checking account. Why? Well, when you incorporate as a business for your rental properties, and because of the tax benefits of owning rental properties, you're setting up your LLC. Well, you don't want to then take your rent payments to yourself, John Smith. That would be idiotic. Why? Why would that be idiotic? Well, it'd be idiotic because then, of course, you're going to end up paying way higher in your taxes. You're not going to be, you're taking the money as a sole proprietor, as an individual, when the LLC is the company that actually owns the property. So if Johnson Holdings LLC owns the property, why would you get a check made out to you as, Bill Johnson? It would make no sense. So you want the monthly rent check from your tenants made out to Johnson Holdings LLC. And therefore you go down to your local bank, you set up a business checking account with that LLC name that as the ownership of that. And to set up a business checking account, all you need are two things. You need your incorporation documents from setting up your LLC, and you'll need your EIN number. An EIN number is your employment identification number, and you get that from the IRS website. So just go over to irs.gov. It'll ask you for your incorporation information from your LLC, and they'll spit out an EIN number. You take those two things down, you go right down to the bank, and you set up a business line of checking, or you set up a business checking account, and you can then start to take direct deposits from your rent inside of that checking account. Now, a word of caution. We used to have our business checking accounts with some large bank. I won't name names, and because they may have changed their policies, they may have changed up a few things, I don't know. But typically with the large banks, you're going to pay for business checking. You're going to pay fees for business checking. So we decided to swerve our plan, and we started using local banks for our business line of checking. Why? Because now it's free, and they don't charge us. So it could be a cost. That's why I put it on this list. It could be a cost, but it's not necessarily going to be a cost if you do it right and you shop around. A lot of local small banks, in order to compete with those larger banks, will have their business lines, their business checking accounts super cheap and almost free, and typically free, so they can compete with the larger banks. We like we're in New Jersey, so we use a local bank called Lakeland Bank, and they're fantastic. And we have multiple accounts with those. We have multiple accounts with those companies, and they're fantastic. We have multiple accounts with Lakeland Bank, and they're really, really great. So again, that's a cost that you may incur or you may not, depending on which bank you use. All right, another one is the property itself. We talked about, of course, the purchase of the property, and then you're going to then have to pay closing costs on the purchase of that property with your title company. So typically your title company our typical title company closing is anywhere from $300 to $500, right? It could be a little bit more, but a good rule of thumb for closing for a rental property, or for a purchase of that price, around the $40,000, $50,000, $60,000 range, is going to be anywhere from $300 to $500 in closing costs. That covers title insurance. That's title insurance with your title company, and that's them running the title search for the property, and then of course recording the deed with the county so that your property is on record with the county as you owning that property. All right, one more cost that some people don't think about, and this is not true of every market across the country. We're in certain rental markets where you have to pay a landlord license. I know that sounds crazy. I need to get a license to be a landlord. But yes, indeed, if you're in Michigan and you're in some other markets where I own rental properties, at the township level, they will mail you, after you close on the property, they're going to mail you a letter that says, please fill out your landlord license information. And this typically costs between $100 and $150. In Michigan, I think it's like $125. But again, this is something that you'll pay for yearly. It's a pain. I know, it's stupid. It's the state's way of, again, trying maybe not to have you do business there. I don't know. I never understand what goes through the minds of bureaucrats in these states. You want to encourage business growth? get rid of the landlord license, $150 fee. I'm going to go in and renovate this property and make this old dilapidated house beautiful again and improve the neighborhood and place a tenant in the property, and you're going to charge me for that? Come on. You know what? Maybe I'll just let that house sit vacant and rats will run around in it and it'll become an eyesore on the neighborhood. So again, a landlord license, figure that as part of your overall fee structure when you're running your numbers. So there you go. We're out here in the wind, taking stock of some of those hidden features, and I hope it wasn't too windy for you when you're listening on the audio of this of the show today. But let's recap some of these again. So setting up your LLC or your business entity, okay, for purchasing real estate. Next up, insurance on the property. You're going to want to take out insurance on the property to protect yourself for liability purposes and replacement costs. Setting up a business checking account. You're going to want to do that. Some may be free, some might cost you a little bit in a yearly fee or a monthly fee to have that checking account. Number 4, the property itself, of course, purchasing the property along with the closing costs, the title search, and those sorts of things associated with the title company and the deed recording. And then finally, a landlord license, which your mileage may vary on that particular thing because you may find that in your area you don't have a landlord license. For instance, Indiana, I know we don't have landlord licenses. Florida, we don't. I believe I need one in North Carolina. I think I have one in Pennsylvania. I think I have one in Michigan. So again, your mileage may vary depending on those costs. But when I look at the properties that I buy, honest to goodness, hand to the heavens, these are the costs. These are the upfront costs of buying a rental property. There are no other costs. Of course, you're filing your taxes at the end of the year with your accountant, but that's not really the cost of buying rental property. So when I look at these overall costs, this is what it is. This is what it is right here. It's these 4 or 5 things depending on your territory. And that's the beauty of rental real estate, that if you do it right, and you know what you're doing, if you work with a company like ours, or if you book a call with our team at Morris Invest, we'll take care of you. Or if you're doing it on your own, of course, then you're going to have to pay for labor and you're going to have to do those other things. Well, the bell is ringing here at the local church, so I guess that means we're out of time. Thank you so much for downloading and subscribing to the podcast. I really appreciate it, and the show. The Investing in Real Estate show, of course, we publish multiple times a week, and we want to thank you so much for subscribing. Now, I just want you to go out there and take action and become a real estate investor. And the bell, it tolls for thee.